ट्रंप ने कहा भारत से नेगोशिएशन.
He wanted the world's attention.
ट्रंप يقول إنها ستجعل أمريكا.
And he got it.
Donald Trump a sorti l'artillerie lourde pour, dit-il, rendre.
The consequences will be dire for millions of people around the globe.
This is not the act of a friend.
Yesterday's actions by the U.S. administration will rupture the global economy.
Keir Starmer held a breakfast meeting with industry bosses.
Clearly, there will be an economic impact from the decisions that the US has taken, both here and globally. But I want to be crystal clear. We are prepared. Thank you, and I think we'll now move to the private section.
The government said it would be consulting with business bosses on a 400-page list of potential retaliatory tariffs. The Prime Minister, speaking later, sounded very reluctant to go that route.
I think jumping straight into a trade war, I know others are saying, why don't you go straight into a trade war from day one, from the get-go? I don't think that'll be in our national interests. But I do think we do have to preserve our rights, which is why we are keeping all options on the table.
I think you can, for the most part, see it. Those with good eyes.
Last night, the whole world got closer to the TV and squinted at the screen. China had a 34% tariff slapped on top of an existing 20%. The European Union got a 20% tariff imposed. Vietnam got a 46% tariff. The whole world wondered, where does he get those numbers?
Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%.
They don't. Vietnam's general tariff is 9%. Donald Trump's team has calculated his 90% figure by taking America's trade deficit on goods with Vietnam, dividing that by the total number of goods Vietnam exports to the US, and getting 90%. America then halves that number for every country in the world to pluck a new tariff, in this case, 46%.
In terms of as a basis of policy making, I mean, it's slightly absurd, it's ridiculous. I don't think you'll find a single economist that respects the method that's been used to determine the so-called reciprocal tariffs. It feels very much back of the envelope.
At the same time, we will establish a minimum baseline tariff of 10%. You notice that on the chart. And that'll be on other countries to help rebuild our economy and to prevent cheating.
That's the category Britain fell into, along with others who were more outspoken about the methodology.
President Trump referred to reciprocal tariffs. A reciprocal tariff would be 0, not 10%. The administration's tariffs have no basis in logic.
The baseline tariff of 10% is part of a plan concocted at such speed, the United States says it'll be imposing it on the remote Heard and McDonald Islands near Antarctica. Totally uninhabited.
There seems to be no order in the disorder, no clear path through the complexity and chaos that is being created.
I brought a hat just in case it got too windy, but here, would anybody like a hat?
The European Commission has drawn up a list of retaliatory tariffs. One Trump cabinet member warned that might well see America slapping down more tariffs in response.
I wouldn't try to retaliate, because as long as you don't retaliate, this is the high end of the number. And I think the market could have certainty that this is the number barring retaliation. So we've got a ceiling.
I think the EU will retaliate, and that will lead to escalation on the US side and
tit for tat.
Tit for tat in the first instance. There is an argument that in the medium term, Donald Trump only respects strength, and that for the EU to even bring him to the negotiating table, they're going to need to ramp things up further. I don't think that argument necessarily holds for countries such as the UK, where any retaliation would probably damage us more than it damages the US.
Genevieve Sweeney exports luxury knitwear to the United States, having shifted her focus after Brexit closed off her markets in Europe.
I am very worried about the tariffs, just because it's a huge part of our business, and we've put a lot of time into building our business in the US. 40% of our revenue comes from the US. We sell to New York, Texas, California, Pennsylvania.
Keir Starmer's hoping the US will trim back or remove the UK's 10% tariffs in return for UK concessions. It's not clear whether exemption is something the US would consider, nor whether it's truly ready to talk.
It's going to be up to President Trump to see what he wants to do. I think the mindset might be to let things settle for a while. Their tariffs or non-tariff barriers have been on a long time.
Some sectors still await their fate. Pharmaceuticals exempted from tariffs for decades. Semiconductors, lumber and copper all worry they could be hit soon. Anti-Trump American protesters on the Canadian border today. Canada retaliated for the 25% US-imposed blanket tariffs on Canadian imports announced earlier. US cars into Canada now get a 25% tariff imposed.
The 80-year period when the United States embraced the mantle of global economic leadership, when it forged alliances rooted in trust and mutual respect, and championed the free and open exchange of goods and services, is over. Well, this is a tragedy. It is also the new reality.
Thanks a lot, Howard. He's doing a very good job. How's he doing, all right?
Waging economic war on long-standing allies opens a new chapter in history. Only a grim economic backlash in America looks like mitigating it. Reversing it, many Western leaders seem to think, just isn't going to happen.
Well, just as Mark Carney there was talking about a new reality, Keir Starmer was talking about a new era, and he seemed to be suggesting that just as America no longer wanted to put up the money to defend Europe, it also no longer wanted to follow the traditional rules of the global economy. That said, Keir Starmer is still trying to get a side deal, which he hopes might mitigate or even remove potentially the 10% tariff that was put on Britain. But you have to say, if this global trade war is taking off as it looks like it is doing at the moment, any such side deal will be utterly, utterly overshadowed by the impact of the trade war.
Gary, thanks very much. Well, earlier I spoke to Rain Newton-Smith, who's Chief Executive of the Confederation of British Industry, and I began by asking her what she thought of the government's current response to Donald Trump's tariffs.
I think what I'm hearing from the business leaders I speak to is that the current UK government approach of staying cool, calm, collected is definitely the right approach.
So you don't want retaliation at all?
No, and from what we're seeing at the moment, I think it is not a good idea for us to go down retaliation route. We know that no one wins from a global trade war, and the danger is if we retaliate, then you end up in this escalating ladder approach, which just ends up meaning more costs on business, more complexity, more challenge.
Doesn't that mean, though, that the UK government has got to sort of hang on and sort of pray for this deal at the whim of Donald Trump?
It does seem a little bit crazy that we are excited by a 10% tariff, but I think we have to look at other countries which have, unfortunately, are seeing much larger tariffs. And I think it's really important that we double down and think about the UK's own economic interests. And I think what we need to ensure is hope that we can do better than that and work hard to negotiate to reduce that overall tariff barrier.
You back the government's softly approach, but has it really delivered us any favours? Because, I mean, we've got the same kind of deal as the Taliban in Afghanistan or Antarctic islands inhabited only by penguins. I mean, are we really winners here?
Look, as we know, no one wins in a trade war. But if you look at
the same deal as the penguins,
but if you look at where the EU have tariffs at 20%, China has tariffs, cumulatively at 70%. I think the government is taking the right approach in trying to get the best deal possible. And what we would urge them to do is also think about what are the levers within their own control that they can really do to promote our overall competitiveness. And
right, so lowering taxes, for example, because your businesses are reeling from the budget still, aren't they? The employers' national insurance rates.
Yes, we know this month we're seeing the increases in the national living wage. We're seeing the increases in the national insurance contributions, and we also have the employment rights bill, which, by the government's own estimation, could add around £5 billion per year to business costs. So I think what we're saying to government is things that are coming down the track, I would go slower. I don't think businesses can deal with more costs, more complexity, as both the government and business are trying to navigate a really difficult trade environment.
So pause the employment rights bill in the context of this trade war?
I would say to the government, now is the moment to look at that again and say, what is the best timing? And also simplify it, make it much more focused on the right outcomes for people, for workers and for business.
Are your members already laying people off because of what's happened in the budget, the general economic picture, but also now because they're seeing these tariffs come in?
Businesses are navigating a world of higher geopolitical uncertainty. That's undoubtedly bearing down on investment, on job creation. And so, again, it's really about the UK government focusing on what is also under their own control. And we know that the cumulative impact of some of the decisions taken at budget and those coming down the track are unfortunately having an impact on hiring.
Right, so members are already shedding jobs and that will pick up pace now because of these tariffs.
We do know that some businesses, particularly in hospitality and leisure and food and drink manufacturing, who are very much facing pressure on their margins, are absolutely having to make some difficult decisions. And sometimes that means not creating as many jobs as they would like or having to let some colleagues go.
Is this the end of globalisation? And, some might say that's long overdue, actually.
I absolutely don't think this is the end of globalization. It's a really difficult period for the world economy, but globalization has lifted millions out of poverty. We have incredibly complex supply chains that have brought us amazing innovations into our lives, and I don't think you can turn back the clock. Obviously, the US president is trying to take a different approach, but I don't think this is going to last the course of history.
Ray Newton-Smith, thanks very much. Well, the prospect of a global recession has sent markets tumbling around the world, especially in Asia and the hardest hit countries like Vietnam. While here, the FTSE index had its worst one-day performance for 8 months. Our economics correspondent, Helia Ebrahimi, has been going through all the numbers and what they mean. Helia, what does it all mean?
I mean, Kathy, make no mistake, this marks the dramatic shift in the global economic order. We're talking about tariffs against 180 different countries at levels not seen since a century. First, let's talk about Trump's bête noire, China, because he'd already leveled tariffs of 20% in January or February. Last night, he added another 34%, making it 54%. But it's not just China. Asia saw extraordinary tariffs above 40%, including Vietnam, where lots of US companies like Nike and Apple have shifted their production. And even long-standing trading partners like Japan have been hit. India, which has effectively banned American corn, saw revenge tariffs of 26%. And by comparison, the UK's 10% seemed relatively mild. It was double that for the EU, with Germany holding one of the largest deficits against the US. And just a few hours ago, the US Commerce Secretary made the case that all of this was because American workers had been disrespected.
Well, let's get back to that markets turmoil. Just tell us about what happened today.
I mean, Kathy, $2.2 trillion was wiped off the global markets today. Shares across the globe fell and led to a crisis of confidence about US policymaking. Analysts said it had been the worst case scenario, not just because of the levels of tariffs, but also because of the lack of clarity around them. The Nikkei in Japan lost 2.8%, with Asia the first to react and slide into the red. But Europe, when it woke up, wasn't much better. Stock 600 down 2.5%. The FTSE 100 down 1.6%. Perhaps a sign of relief that our tariffs weren't that bad. But it's in the US where all the action has been, as companies try and figure out whether they have to rethink their entire business model. The S&P 500 down, the dollar down, the Nasdaq down around 5% at the moment. Tech giants all in nosebleed territory, Apple down 8%. That is a loss of $250 billion in a single company. Remember, this is a company who promised Donald Trump it would invest back into US manufacturing. Well, to no avail. Nike, well, we talked about that earlier, that's down 11%. US companies, all of these US companies have long, large, complex supply chains now find it unclear how to unwind fast enough to avoid being squeezed. And Kathy, the result is that economists think this all amounts to inflation, a loss of business investment, and a material risk of recession.
Helia, thanks very much. Well, for more from Helia on the tariffs, she's been talking to Krishnan for the latest episode of the Forecast podcast, alongside the American author and commentator Robert Kaplan, examining the nature of American power and whether a trade war could escalate into a military conflict. You can watch it on our YouTube channel. It's also at channel4.com/news and wherever you get your podcasts. Let's go now to Aisha in Leeds.
Thanks, Kathy. Well, the Labour MP Liam Byrne is chair of Parliament's Business and Trade Committee, which is currently on a visit to Japan aimed at promoting growth and offsetting Trump's tariffs. I spoke to him earlier and began by asking for his reaction to the president's tariff announcement.
It's bad news. I mean, it's going to batter business. It's going to jeopardise jobs. It's going to weaken wages right the way across the Western Alliance. I think there's been some sharp diplomacy from the British government. That means that the impact on us is going to be less than on our allies. But, you know, we can't be under any illusions. This is bad news for UK growth. It's bad news for UK taxes. It's bad news for the UK economy.
Even with the preferential tariff that you referred to there of 10%, this is going to be awful for businesses. What's the government's strategy then going forward?
So my view is they've got to do two things now. So one, coordinating with business. So the consultation the Secretary of State has launched today is a smart thing to do. Remember, it's not just about lost sales in the United States. It's also about trade, like steel's a good example, being diverted from countries like China and flooding the UK markets. So we've got to make sure that we've got the right safeguards in place. But the key thing we've got to do now is coordinate with allies. We now need to deepen our trade alliances with like-minded nations. That's got to start with the EU, reset the relationship with Europe, draw closer, and cut that red tape for our traders.
Just on that then, should the government not be a bit bolder? Shouldn't we be adopting what the EU is doing right now to further align with them?
So we just don't have the market power that the EU has. There's only basically two trading blocs or countries on Earth that can do things that are so big that they would cause Americans so much pain it might change their minds, and that's the EU and China.
You're in Japan right now. We've seen the Asian markets are down. What's the reaction you've gathered?
Here in Japan, there has been shock at the level of tariffs that has hit the Japanese economy. It is seriously bad news for car makers here in Japan that employ millions of people. But talking to Japanese ministers today, again, the message is being, look, we've got to keep the conversation going with the Americans. We've got to argue our case. We've got to be patient, got to be strategic about it. But crucially, we've got to draw closer with like-minded allies.
And just where do you see this going in the next few weeks? We're essentially in a trade war right now, aren't we?
So it's always possible to make a bad situation worse. And, you know, if the world decides to retaliate like for like with Donald Trump, that could increase the pressure on the UK economy. We think that the tariffs that have been announced may take about 0.6% of economic growth. So it may halve economic growth this year. If there's a full-scale global trade war, that could crater economic growth in our country. We think today's announcement might knock maybe 5 to 6 billion off the tax base. Again, full-scale global trade war, that has a really significant impact on our trade, our economy and our tax base.
Would it mean that you would have to raise taxes?
Well, look, I personally don't think you can rule that out, because ultimately you've got to keep funding public services. You've got to keep funding the investment that we need in order to succeed in the future. That isn't free. And so there could well be tough choices for the UK government ahead if this situation goes from bad to worse. But as I say, that's what our policymakers have really got to stop happening. It's possible to make a bad situation worse. Keeping people from full-scale retaliation that would trigger that global trade war is really in the UK's interest right now.
Liam Byrne, thank you very much for your time. Thank you.
Thank you.
Well, in the United States, where, as we heard from Helia, $2 trillion was knocked off the value of leading firms, White House officials have been insisting the US economy will eventually do extremely well. Although Vice President J.D. Vance admitted we're not going to fix things overnight. So what about the immediate impact on American incomes and jobs? Our Washington correspondent Siobhan Kennedy reports.
Markets in sell-off mode big time following the announcement of President Trump's new tariffs yesterday.
The red screens tell the story. And remember, these are the American markets that Donald Trump's tariffs are designed to boost.
I mean, no matter how you slice it, it is considered worse for economic growth.
But investors clearly didn't buy the story, betting instead that the president's decision to slap much bigger tariffs on nations across the globe will in fact hurt the U.S. economy. Certainly in the short term. Up on Capitol Hill, Republican senators batted away questions.
Will it wreck the American economy? Will it wreck the economy, though? Are you worried about that?
While some did their best to defend the president's move.
Won't tariffs wreck the American economy?
Hopefully they'll bring back auto jobs. My auto workers love them.
My auto workers love them, Senator Hawley insisted, but other Republicans begged to disagree.
How do you feel about the tariffs? Are you worried they're going to? Are you worried they're going to hurt the American economy and the American people?
Tariffs are bad. They are bad for any country that imposes them. Tariffs are a tax. It's a tax on trade. If you tax trade, you'll get less trade.
So why is President Trump doing it?
That's not a good question for me.
Well, do you believe in why he's doing it?
As you'd expect, Democrats also poured scorn on Trump's move.
Senator, can we have your reaction to the tariffs?
So President Trump has claimed that slapping tariffs on all of our close friends and allies around the world will somehow achieve liberation. I don't know from what he's liberating the American people. He ran on making America affordable again. There are millions of Americans who voted for Donald Trump believing he would actually reduce prices. He is demonstrably raising prices.
The tariffs are a catastrophe. There's no intellectual basis to them. They're totally arbitrary, and they're going to do immense damage to the economy and already are.
What if he does manage to bring jobs back? I mean, the president was touting deals already in train. Is there something in that?
Well, our economy is not doing well right now. Consumer confidence is low. We had record job losses in February. The stock market is crashing. There's no evidence that Donald Trump knows how to manage the economy. There's no evidence that the economy is improving. In fact, it's getting worse.
Big tech falling hard in this sell-off related to tariffs.
As billions were wiped off Trump's beloved stock markets, the White House went on the offensive.
To anyone on Wall Street this morning, I would say trust in President Trump. This is a president who is doubling down on his proven economic formula from his first term.
But in fact, plenty of economic studies show that American consumers and businesses were hit hard by Trump's tariffs in his first term, and jobs still moved overseas. And yet he's always believed they're the ultimate trade weapon.
The fact is that you don't have free trade. We think of it as free trade, but you right now don't have free trade.
This was him in 1987.
And I think a lot of people are tired of watching other countries ripping off the United States. This is a great country.
And these were almost the exact same words yesterday.
Our country and its taxpayers have been ripped off for more than 50 years, but it is not going to happen anymore. It's not going to happen.
As evidence, Trump clings to the early 20th century when he believes tariffs generated surplus wealth for Americans. But global trade killed U.S. manufacturing and jobs, he says, and tariffs are the only thing that can bring them back. Except this is 2025, and global supply chains mean tariffs will hurt American firms as much as everyone else.
My fellow Americans, this is Liberation Day.
For all the tough talk and rousing White House videos, it's a massive economic and political gamble. But having rolled the dice, President Trump is holding firm, posting today, "The operation is over. The patient lived and is healing. The prognosis is that the patient will be far stronger, bigger, better, and more resilient than ever before." But with countries poised to retaliate with their own tariffs against America, the patient may not be out of the woods just yet.
Well, I'm joined now by Scott Paul, the president of the Alliance for American Manufacturing in Washington. Scott Paul, what I'm hearing from leaders and economists around the world is that an all-out trade war will impoverish us all, American consumers included.
My hope is that we don't ultimately get a trade war from the announcements from the White House yesterday. I will say I'm not surprised by a market shock or by the initial reaction, but I do think this is a start of a process for rebalancing. And in the United States over the last couple of decades, we've seen globalization have a devastating impact on manufacturing communities, on families, on working people, and on our capacity to supply basic things for the American people.
Right, well, I'll come back to that in just a second. But you said you hope there won't be an all-out trade war. But why shouldn't EU countries and the UK retaliate when they've been hit with this? 10% for the UK, relatively minor. But, the UK charges an average of about 4% tariffs on imports from the US. So that's blatantly unfair, isn't it? Why shouldn't they retaliate?
Well, I think if you look at the evidence, and there is a lot, including a report on trade barriers that the United States Trade Representative put out this week, that we have a way to go to negotiate. Now, President Trump has decided to approach this from a coercive point of view rather than a collaborative point of view.
Right.
And you can debate whether that is the right approach or not. But I will say this. There are few markets that other exporters can go to that absorb as many imports as the United States. We absorb more imports than any other country. We're responsible for 30% of global consumption. About half of all the automobile imports are absorbed by the American consumer.
Right.
So, I said, I do hope this is the beginning of a process.
Well, and you say he's adopted a coercive approach rather than a collaborative one. So do you think it's a negotiating ploy that when he, if the market reaction continues and he gets retaliatory tariffs put in place, he will back down?
I do believe that on critical sectors, there will be tariffs in place for decades to come. And that's been a trend in the United States since 2016. And in fact, Joe Biden really didn't take any Trump tariffs off. So I don't see our country becoming more open from a trade liberalization point of view. But I would expect if there are, like the EU or the UK or other countries, come to the Trump administration, say, let's talk about import and export balance, that they'd be open to those conversations. In fact, the president's cabinet indicated that would be the case as well.
Could do a deal. I mean, you talked about the downsides of globalization, and I'm sure many people, particularly workers in your kind of industries, would agree with your comments there. But the point is that you can't overturn an order that has existed since the 19th century overnight. I mean, any benefits will take a rather long time to feed through, won't they?
Yeah, I'm not going to dispute that. And I'm not going to pretend like this is a process that won't be without cost. But how those costs are managed are going to be very important. And whether those costs are passed on in full to consumers, whether some of the big global companies who have been very profitable and who have gained a lot from globalization will be able to absorb lower margins, and there will be a reallocation. I agree with you. This is not a problem that's going to be solved overnight. It took us decades to get into this, but this is, I think, a signal that we've reached the bottom, and it's from here on up, we're looking to rebalance the trade equation.
Welcome back. And back to the story dominating tonight's news. Donald Trump's sweeping trade tariffs, which have sparked fears of a global downturn. Mr. Trump has just declared it's going very well, predicting the markets are going to boom, although more than $2 trillion has just been wiped off the value of US leading shares. Well, earlier I spoke to João Valle-de-Alme, who has served as the European Union's ambassador to Washington. His new book suggests countries have been sleepwalking towards a divorce. I began by asking him whether he thought that Trump's tariffs are just one big economic experiment.
That's for sure. Our globalization was a good experiment. Trump's idea, I'm not sure it is a good experiment. This is kind of, back to the future approach by President Trump. He's going back to the 19th century. ignoring that today's economy has nothing to do with the 19th century economy. And even the calculation of the tariffs, the formula that has been circulated, no economist has been able to understand the rationale behind it.
I mean, the fact that you and other EU figures are now talking up the idea of negotiation, is that an admission? To quote Hungary, for example, Hungary's foreign minister today said that incompetent people are leading European institutions and they're suffering from a very serious Trump phobia. Is it an admission that the approach of the EU to date, escalating, has been wrong?
No, I cannot accept this kind of Hungarian comments, which don't come as a surprise because their positioning is very close to Trump and, by the way, very close to Putin. So, no, I don't really take it very seriously. But what I see is the American president taking a very hard line on this, us trying to control our response in order to make things worse, us continue to say this is not good for anyone. This is not good for us, not good for American consumers, not good for the American economy, we believe. So let's try to negotiate us out of this. This is the approach.
So does that more emollient approach then mean that a blanket targeting of US tech companies, as some have advocated, that would be the wrong approach?
I wouldn't call it emollient. What we're trying to do is give, like the song, give peace a chance and give negotiations a chance.
And if that fails, you've got to go to war.
If that fails, we're going to war, and we are not afraid of a trade war. We don't think it's a good thing, but we are a very powerful trade bloc, the most powerful in the world, the most powerful single market in the world. So we have our tools.
Do you think now that an EU recession is odds on, potentially a global recession?
I think there will be certainly a surge in inflation in every market for obvious reasons. And the inflation could lead to recession because this kind of measures will sort of transform the whole supply chain, the whole value chain of a globalized economy. At the end of the day, maybe a global recession. Do we want that?
Ultimately, does the UK have to make a choice between clubbing together with the EU, showing a sort of unified approach to Trump, or throwing its lot in with the US?
That's a good question, because we are involved in a very important operation now of trying to reset our relationship after Brexit. And I'm very hopeful that it will be a successful one. So, but there's a limit in which, to which the UK can go in getting closer to the US in order not to undermine what it can do with the EU. If, for instance, you go for a trade deal that involves lowering standards in the UK, this will make it more difficult for us to find a veterinary agreement with the EU, for instance, which is one of the ideas being discussed. If you give too many concessions to the US in a number of areas, that puts you further away from the position of the EU, of course, makes things more difficult.
The subtitle of your book, A Diplomat's Inside View as the Global Order Collapses. We referenced this global order collapsing at the beginning of the interview. I mean, is this the end of globalization, do you think?
Could be. If the whole package is implemented, this is a fundamental change. I don't think we can call it globalization after, raising tariffs to the level of 50 and 70% or whatever. This is a watershed. This is a revolution. So, like any revolution, you don't know exactly what it will produce.
João Vale de Almeida, thank you very much for joining us.
My pleasure.